Hey, fellow stock guardians, happy Tuesday, July 27th, 2021. I'm Hoda, Stock Card CEO, reporting to you from a red stock market. I looked at market indices dip today as the new Chinese regulations and crackdowns impact the market. I also explored the pet care industry and the optimistic outlook of some major companies like Petmed Express. Lastly, I looked into a few growth stocks that dropped today despite seemingly positive earnings reports, LOGI, TDOC, FedEx, and UPS among them. The market indices ended the day in the red. A few forces are at play. Regulatory crackdowns are continuing in China, and the US listed stocks are losing billions as the week goes on. The International Monetary Fund, IMF, a financial institution with input from 200 countries involved, warned that inflation is not transitional. The road to recovery is very uncertain and subject to unforeseen effects like supply chain issues. The Federal Open Market Committee of the Federal Reserve commenced its monetary policy meeting today. Economists and investors are awaiting the announcement tomorrow of the Fed's plan of action going forward. It's not surprising that the market is not giddy. Folks, let me tell you how excited I am that you are my fellow stock guardians. When I started a stock card, my vision was to create a stock market research assistant and tool that everyone can use and understand. You guys and gals watching, reading, and listening to the Daily Roll episodes is one of the highlights of our company's success. Thank you. If you aren't a stock guardian yet, I'd like to invite you to try now. First, hit the like button and subscribe to the show, and then create a free account on stockcard.io. Thanks for becoming a new stock guardian. A report by the American Pets Product Association says that the great growth seen during the pandemic is due to continue through the rest of 2021. Food and treat sales had gone up 10% last year as consumers pivoted to purchasing their pet products online, who continue to do so regardless of the reopening. This overall market optimism kept Petmed Express, ticker PETS, investors happy despite a disappointing earnings report released yesterday. Income didn't top last year's same quarter, but it appears to be a hiccup in a reopening market. The company's CEO, Mendo Wagda, blamed the spike in advertising costs and a loss of sales to veterinarians that have reopened their doors for Petmed's underperforming operations. This positive outlook on growth represents a good opportunity. While Petmed may have not killed it this past quarter, things are still looking good judging by the company's stock card. On their strong operations, you can see great ratings for its cash flow and debt situation. It doesn't have the best track record for returns on investment for shareholders, but at least the company is well managed. Like I mentioned before, the healthcare and pet care markets are both expected to see plenty of growth. The market's direction may also mean good news for other pet stocks like Trupanion, TRUP, and CHWY, CHWY. Most people keep their pets even after a pandemic. So if you got into buying stuffs online for your pet, you'll probably stick to it. I own Trupanion shares and plan to hold on to them. CHWY is on my watch list too. Before moving to the loser stocks, let's take a quick stop to explain why TAL Education, TAL, and New Oriental Education, EDU, are up today. Based on our research, it seems short sellers who benefited from the rapid price drop are now closing their positions to lock their gains, and that means a hike in price due to covering shorts. This isn't the usual short squeeze we have talked about in the past. This is just short sellers enjoying their profits by covering their shorts at a very low price. On the loser side, a few solid companies turned red today after their recent earnings showed signs of a slowdown in growth. Here are a few I noticed on today's losers list of stocks on the side. TDOC, ticker TDOC, stock is down after hours. It released an earnings report today that disappointed investors. While revenue grew, net loss was more than 5 times worse than the previous year. It wasn't quite shaping up, and that wasn't the only company that took a dive this afternoon. UPS, ticker UPS, beat forecast with its earnings report showing an increase in revenue as well, but like TDOC, the stock dropped. It closed away with a 7% loss as management made it clear that they expect to see a slowdown in growth over the rest of the year. FedEx, ticker FEX, and UPS operate more or less side by side in the same market, and this pessimistic outlook brought down FedEx share price as well, down 5%. Another similar situation happened for LOGI, ticker LOGI. The stock dropped over 10% after its earnings report yesterday. Operating income grew 146% year over year as more people needed computer accessories during the pandemic. However, management maintained its future guidance on sales growth, expecting numbers to maintain a flat rate, going no more than 5% in either direction. Such growth is in line with the sector growth, as you can see on the company's stock card. The technology and computer hardware sectors are expected to see a 5% growth rate, and with supply chain issues still affecting the industry, it's a good thing management isn't raising investor hopes too high. All these companies are worth watching depending on your strategy, especially if the sell-off continues. And let's wrap up today by talking about how yesterday we went viral on TikTok thanks to our partner Investiva. She was telling TikTok and Instagram about a stock market research tools she loves, and the TikTok and Instagram investor community loved it.
4 great websites to create a stock investment strategy without falling for hype and FOMO. First is stockcard.io. Here you can filter through different types of stocks and pick the exact right one for your portfolio. For example, you can select stocks that are below $10, have a high growth potential, and are currently undervalued.
Check out Kiana's TikTok and Instagram video and see how she uses the stock card to find interesting stocks. Thank you, Kiana, aka Investiva. That's it for today. If you haven't already done so, please give a stock card a try, research as many stocks and ETFs as you want, and consider following a few successful investors by visiting the stock picks page on the stock card platform. Don't forget to sign up for a 14-day free trial with promo code ROLLWITHOURCEO, all lowercase and one word. Like, subscribe, and share these daily market recap reports with your fellow investors. Come back tomorrow for another episode. I'll see you then.